Hey, boys and girls, it's Danny Brown with the Deal Podcast. Please subscribe and comment anywhere you consume your podcast, whether it's Spotify or Apple or YouTube. Leave us a comment. Each person that subscribes and leaves a comment helps our ratings and our sponsorship so much. And our sponsor, speaking of sponsor, is the Optimist LA. Optimist LA is at the platform in Culver City. It's an incredible place to hang out and shop. Platform's got all sorts of restaurants and shopping, and the Optimist LA has incredible clothes and lifestyle stuff handpicked from all over the world. You don't have to travel the world to shop boutiques. They do it for you. You can go to the Optimist LA or platformla.com or go to the Optimist in Culver City. Tell them Danny Brown sent you for 20% discount. Appreciate it. Today's episode is my man, Kenny Stevens. He's at Compass. He leads a big team of apartment brokers and investment brokers in LA. They are consistently in the top 200, 300 brokers in the country. They focus on 1031 exchanges and investment portfolios, and we're going to break out into what's going on with COVID. It's been such a strange time for landlords and tenants as the rest of us are treading through this, but they've really been in the middle of the epicenter of it, which is why I try to keep getting people that are dealing in this space. So school's in session. He's going to break it all down. Hope you enjoyed as much as we did. And please subscribe and leave me a comment so I don't go out of business, bro. Kenny Stevens, welcome to the deal, my brother. Good to see you. How are you on a cold fall October morning with the wind blowing? Our poor Dodgers should have won last night. That was a home run that Lux hit.
Sorry about the Dodgers, though. It'll be better next time. But
that's today. That's tonight. We better win. We're going home.
Yep. We'll win. It's a little crispy, but it's beautiful. I'm doing well. Thank you very much. Thanks for having me on the deal. It's always a pleasure to be here with you.
We finally connected on this. So Kenny, for those that don't know Kenny, he's at Compass. He leads a big apartment brokerage team. They sell a lot of investment properties in LA. And because you do that, and I had on my buddy Nima, who does the same thing, who you know, I'm curious to hear your take and just give us a few bullet points with the emergency order and the rental moratoriums that are going on. I know there's some conflicting and confusing information, but as of now, where are we? October 12th, 2021. Where does that stand?
Yeah, so things currently are as follows. The statewide eviction moratorium that's been in effect for well over a year is now over, expired on September 30th. That's the statewide eviction moratorium. So if you're anywhere other than LA County, unless there are other local laws, then the eviction moratorium is over, which means you can now begin an eviction.
Okay, but we are in LA County.
The County of Los Angeles extended the eviction moratorium until January 2022. The City of Los Angeles extended the moratorium until October of 2022.
Wow. Okay, so we have a year in the City of LA at the moment before anyone could evict or even think about evicting anyone.
Before you can even think about evicting anyone.
And I imagine you could still evict somebody for extreme reasons, other legal issues, but you just can't for not paying rent. Is that what it's about? Or how does that break down? I mean, if someone's doing something illegal or violent or dangerous, I imagine you can do something.
I'm not sure about that, but
really?
I'm really not sure about that. I don't think that you can evict somebody, even if they're a public nuisance at your building. I don't think you can evict them. And even if you could, the queue for evictions is so long that it's going to take a long time.
Okay. So I guess that's what I've heard now from a few of my investor friends and clients, that's the case. So even if there are exceptions where you could evict somebody, the pipeline is so clogged and so backed up that by the time they get to your file, who knows how far in the future that's going to be.
Yeah.
So that's why
people aren't necessarily going the legal route, but rather, if you're a landlord and you have a tenant who is a nuisance or who you do want to evict for one reason or another, the landlords are just going to the tenants and trying.
So cash for keys is happening, or they're trying. Landlords are trying to buy people out.
Yeah, and which is terrible. I mean, it just rewards bad behavior of a tenant that would normally be an eviction.
Right.
But right now, it's just everything's too backed up. The courts are backed up. The sheriffs are backed up. Who's gonna actually like go out there and lock out the tenant? Like,
yeah. And there are, I imagine, bad actors, tenants taking advantage of this and not paying rent even if they're making good money and trying to squeeze landlords to buy them out. I mean, imagine there's always people that take advantage of these sort of things.
Yeah, some, but not as many as generally we had all feared in this industry at the beginning. So no, I think that for the most part, it kind of depends on how you feel about people and people's general makeup. But for me, I believe that people are generally good and people generally do the right thing. And you know what? If you're a tenant and you're paying rent and your rent hasn't, your income hasn't been affected, for the most part, you're going to keep paying your rent because it's just the right thing to do and people do the right thing.
Well, that's good to hear.
Yeah.
Mankind isn't so bad after all.
No, depends who you talk to.
Depends on what day. And to another question along this, and then we'll get into your story. Overall, with your clients and all the clients that you touch, which is quite a bit, I'd say mostly in LA County, I would imagine.
Yes.
Can you give an approximate range of vacancies now, sitting in October, versus maybe the first quarter after COVID a year and a half ago? I imagine that things have changed.
Well, you mean vacancies, or do you mean
Yeah, I mean
non-payment?
I'll say that non-payment. How many people? What percentage of tenants out of every 100 are not paying rent today, either lower rent or not paying rent today in October, versus when it first happened a year and a half ago in the middle of? I mean, I know it's probably.
I mean, it was probably a year ago that you and I talked. It was over a year ago. It was probably beginning of summer
beginning of COVID.
Yeah, yeah. It was more towards the beginning of COVID, and it was around 10 or 12%.
Right.
Of collections. And right now we're running at about 6% or 7%.
Okay. So it's about 50% better than it was. And now let's talk about pre-COVID, when we didn't know about COVID. What was the average of the couple of years before COVID started that people weren't paying rent? Must have been really low.
Yeah, collections issues weren't really, talked about. There were vacancy, like what was the vacancy factor? The vacancy factor has been 2% or 3%. It's the same, but collections weren't even a topic because if someone didn't pay,
get evicted.
You evicted them.
Right.
So it really wasn't a huge issue.
All right. So now in your crystal ball, here we are, all these unknowns. We imagine you can't evict someone in LA until next October. And who knows if they extend it or reduce it? We don't know. But at some point, this stuff has got to end. At some point, we're going to move past it. And what does the landscape look like after? Back to the way it used to be? Or do you see it being somehow fundamentally changed after this? Just in terms of vacancies and being able to evict. And, we've had such a high demand for rental properties, and it's been high demand because there's so many tenants, and then high demand for investors because it's been such a good long-term investment. Do you see that continuing once we get through this cloudy COVID period?
Well, let me bust out my crystal ball and figure out when.
I see something back there that looks pretty good.
Yeah, hold on a second. Let me just.
Yes, just rub that thing a little bit.
That would. So we don't know when or if this COVID thing is going to end. I anticipate that it's not. It's permanently changed the landscape. It's not going away. It's just going to be less heightened for sure. So there was a move away from the city center, and there was a move away from the main metro areas into the suburbs. That's one thing that we saw during the last year. People moving from downtown, people moving from the crowded, more dense areas into the valley. And well, now mean, if you're young, if you're in your 20s or your 30s and you want to be, around people and you want to be around restaurants and clubs and things like that, you're moving back into the city. So we're seeing that. Rents have been going up. Rents have been increasing. Rents are, I would say, back to pre-COVID levels.
Wow. How about that?
Yeah. So, and part of that has to do, I think, with the moratorium because you couldn't evict anybody. So there were less vacancies. People weren't giving up their apartments. So it's just supply and demand. You have people who want to move in. There aren't that many apartments available. So
makes sense.
It's going up.
Yeah, it defies logic, but then when you analyze it and break it down like that, you're like, oh, okay, yeah, there's very few opportunities to get an apartment. And if someone has got a job and good credit and they're fresh coming into LA or coming into the rental market, they have limited places to go. So, okay, that makes sense. It also seems from the outside looking in and, having my hands a little bit in the investor market that in terms of investment sales of apartments, it doesn't seem to have slowed down. It seems to be still very active. Am I wrong about that?
Well, it's slowed down significantly last year in 2020. I've been watching every single month. I watch the number of transactions. My focus point is anywhere from, let's say, 8 units to 80 units in the greater metro area. So those are the stats that I watch. And on a monthly basis, the transaction volume from pre-COVID to COVID to last year, 2020, the transaction volume dropped 50% or more.
Yeah.
So it was down. It was down significantly. But now,
that's when it first started hitting.
That's then. And now I'm seeing that the transaction volume is back to 2019 levels.
Wow.
Yeah. And prices are back, and prices and cap rates are back to 2019 levels.
Got it. So still low cap rates, still quite a demand. So investors the smart money is still chasing apartment deals with low cap rates.
Well, we don't know if it's smart money yet, but we'll see.
Well, so-called smart money.
Yeah. It is. Some very, very, very savvy people with some very deep pockets are still investing in Los Angeles.
They're still looking at that. All right, so let me pivot here, and we'll get off this crazy apartment world, and let's get into your story, Kenny. So you've been in the business now, what, 20 years or so?
20 plus, yeah.
20 plus years, but who's counting? So tell me, let's go back to the beginning. Did you grow up in LA area?
Born and raised Los Angeles.
Born and raised. Where'd you go to school?
I'm a Valley guy. So I went to El Camino High School.
El Camino Real. Val, bro. He's a Val.
Los Conquistadores.
The Conquistadores. Great baseball program,
I think now that's not politically correct, so I think they may have changed the name to, like, I don't know what. But I think they might have changed the name of the school because.
Man, you guys were a powerhouse in baseball. My boy Ryan McGuire played baseball at El Camino, man. He was a beast.
Yeah. So I remember trying out and not making the 10th grade baseball teams. Yeah,
could imagine. Okay, unless you were getting drafted, you probably weren't making that team.
Yeah. It doesn't say too much about my baseball skills.
So, grew up in LA. Then, did you get right into real estate, or did you have what did you do before real estate?
I went to Cal, so we had a lot of
Go Bears.
Yeah. I went to Cal and I was studying economics and I took some classes on real estate. And I remember a guy came in to speak to our class who was a real estate broker. And I'm kind of a clothes guy. I like.
It was pimped out.
So it was so pimped. I was like, ooh, okay.
I like what he's doing. What's he doing?
Whatever he's doing, I gotta look into that. So yeah, that's when I was always into sales and I was always into, commissions and earning money that way. So I just figured if I'm going to sell something, maybe I should sell something big, and an apartment building seemed like an appropriate thing.
Got it. So was the apartment building sales, that was your first job in real estate? It was always apartment sales, or did you try something?
No, I graduated in 1990 from UC Berkeley, and the market wasn't very good, and it was tough to get started in real estate. So I started in office equipment. Mm-hmm. So I was doing like copier sales. I was selling copy machines.
Hardcore sales.
hardcore sales, super
Yeah, yeah.
competitive.
Good training ground though, biting your teeth on a hardcore sales.
Oh, great training ground. I would recruit some people. I would recruit some guys from that field in a second to work with me right now.
Yeah, yeah.
So I did that for 3 years and got some really, really good sales training and some experience. And then I was in marketing for a little bit, and then I was in the I jumped on the internet train, and I was working for AOL when they were the 600-pound gorilla.
Yeah, you've got mail. So you were in AOL in the beginning of the tech explosion, in the early tech, the first wave.
Yes.
How cool is that? What was that like?
When everyone in the company was watching their stock tickers like nonstop, like watching their AOL stock go, you know, the receptionist was a multimillionaire. It's like, okay, this is interesting.
This is interesting stuff.
Yeah.
So AOL, and then you ended up in real estate.
And then I ended up in real estate. Yes.
Got it. So here you are, 20 plus years into the game. You're a real estate investor sales expert. You know, what are some of the fun, interesting stories or deals that you can share? Anything come to mind that through the years, it could be funny, it could be scary, it could be crazy?
I mean, the probably one of the scariest ones was right at the beginning of COVID. I mean, I had the biggest deal of my career happening in it was supposed to close in December 2019.
Okay.
But it got delayed, and then the closing date was March 2020.
Oh.
And COVID's coming. This was a huge deal, and it was obviously a lot of money, and everything was coming down the pipe. And I was talking to my one client and his investors. His investors were all over, literally all over the world. And his investors are saying, "Why are we buying this? Why are we investing? Why are we doing this?" And God bless. I said, "Don't worry, it's going to be fine. Let's move forward." And every day that it got delayed, and the sellers, of course, were
panicked,
freaking out because they're like, "What's going on? Is this guy going to close?" And I was freaking out. It was nutty, but we ended up closing.
When did it close? After COVID happened, or?
I think it closed somewhere around like March 15th or March 19th.
Right as it started, really. Can you imagine if they delayed it another 2 weeks? You would have been in the middle of it. Where was this deal? Was this in LA, I assume?
It was in LA. It was a prime location, prime location, and it just couldn't be a better location, and they saw the opportunity, and it's a great deal right now. I mean, they're loving it.
What's the deal? Where can you share that?
Over by the Grove.
So prime time.
It was a portfolio. It was a portfolio of 4 properties in prime Grove location.
Yeah. So look, you get the question, we all do as real estate agents. Hey, well, how's the market? Is it a good time to buy? But you're dealing with investors. So that's all they're thinking about is return on investment and risk and this and that. So if I'm a new investor coming into the market, what is sort of the guidance you give? What do you say? You don't have a crystal ball. No one could say. All we can say is, hey, it's 2021 and this is what the market's done in the rearview mirror. We can never look through the windshield and see. But what is your advice if someone's like, I'd like to invest? What is sort of your sage wisdom that you would tell first-time investors if they're asking you what they should be thinking about? If there's any type of product that you suggest, a certain amount of units to start with, price points to start with, whatever you would suggest to somebody who's trying to get in the game.
Well, it's tough to get in the game in LA if you're trying to buy a property yourself.
Good point. I struggle with that constantly. We talk about that all the time.
Yeah, it's tough. It's tough to get in the game. My first investment when I got in the game, I started at Marcus and Millichap in my first 7 years at Marcus and Millichap in Encino, and one of the other brokers there was syndicating a deal, and so that was my very first apartment investment. Was I think $12,000 that I put into this deal.
Oh God, you did it early.
Yeah, which was I wasn't that young when I started, but. It was right away when I started, and maybe a year later or a year and a half later, that $12,000 was, $20,000. Like, okay, this is good.
Yeah, it's a great return, home run return.
So it's a really good way to find, if you're coming into the game with $50,000 or $100,000 that you want to invest, you're not going to be able to buy anything yourself with that kind of money, unfortunately, in Los Angeles.
Right.
That way you can see the returns, you can see how the business works. You're gonna, you can join with somebody who invests for a living, so they find better deals. They have access to better deals. They know how to manage properties, and it's just like, you can invest with them, awesome. And as I do a lot.
So let's unpack that, because that's a great piece of advice. Because for the last 10, 15 years, every time I'm diving into, I want to invest in a property in LA, I get hit with what you just said. The barrier of entry is so high. The amount of capital is incredibly, incredibly high. Very hard to do. So syndication. So what does syndication look like? Let's talk through, sort of dumb it down, syndication 101. So give me an example. I have $100,000 I want to invest, and you tell me you have a syndication deal. What's a typical syndication deal in LA look like if I have $100,000? Obviously, I'm not buying a building for $200,000 or $300,000 in LA. You're lucky if you get a building for $2 or $3 million. But let's say I have $100,000 and I want to go that route. What would that look like? What could I expect?
So how that works is like this. If you have $100,000 you want to invest. So you go to someone whose business is syndicating apartments, and most of my clients syndicate. So most of my clients, when they go to buy a $6 million apartment building, they're not putting $3 million of their own money in to buy the apartment building. They're raising funds. They're raising funds from friends and family to put together the $3 million that they need to put down to buy the $6 million apartment building.
So they're raising the equity from friends, family.
They're raising the equity. So out of that $3 million that they're raising, your $100,000 will be part of it.
Got it.
And so for that, you get a proportionate share of the profits and a proportionate share of the cash flow. And the syndicator, the person who's putting together the syndication, he or she takes a percentage off the top. So they get, after the investors are paid out of the profit, that syndicator may take 20% or 25% or 30%.
All right. So there's so many things to unpack as we go through this. So let's keep it simple. You're raising $3 million and everyone's putting in 100. So it's 30 people did that. Now is there a preferred, I won't say guaranteed, rate of return? And if so, for my 100,000, what is the average range for this type of size deal?
Every deal is different and every syndicator is different.
Sure.
So I would say on average or
give me an example, give me an example of what it could look like.
Typically they'll tell you, give me the $100,000, I'll give you 6% return.
Okay.
And
does that get paid quarterly, or does it get paid annually, or does it get paid only when they sell the building, like a lump sum at the end?
No, generally your payments are quarterly.
Okay.
And if there's cash flow from the building, if there's cash flow coming in, then you get a percentage of that cash flow.
Certain percent of that.
Yeah. So depending on how much of the $3 million you put in, that's how much of the cash flow you get.
Really? So if you put in 300,000, just to keep it easy, of the 3 million, and you're 10%, in theory, you would get 10% of the cash flow income?
In theory, 10% of the cash flow income, but the cash flow income may be maybe a 2% or a 3% return on the total investment, and you're getting 10% of the 2%.
Right, correct, of the net profit. Okay, so that's interesting. And then I know, again, it's different in every deal. So now I'm getting my 6%, I'm $6,000 a year quarterly. And now, what would be a typical timeline where an event would happen, like where they would refi or sell the building? 3 years, 5 years, 10 years? I mean, I know it's different. But what would happen let's say now it's 5 years later, and this $6 million building is now worth $10 million, let's say. Mm-hmm. And now they're selling it. So what happens to my $100,000 investment? I get a percentage of the sale?
Yeah, this is not an unrealistic example. So, the $6 million building 5 years later is now worth $10 million.
Right.
Well, what happens a lot is that they won't sell the building. They'll refinance the building.
Okay.
So now they'll do a cash out refinance, and instead of that $3 million loan that they had before, now they're gonna have a $6 million loan. So they're basically getting back $3 million from the bank. So now there's an additional debt, but there's $3 million of liquidity there. So
right.
That means that everyone who put in money gets a big check.
So when you say gets a big check, you get made whole, or it just depends how much
you get? Generally speaking, the investors made whole. The investors are made whole, and then after the investors are made whole, that's when the syndicator or the sponsor gets paid.
Got it. So that's more, and then you stay in that investment.
And then you stay in that investment because you still have the property. So you got back. Let's say you got back $60,000 out of your $100,000. So now you're only in it for 40. So you got 40,000 in it. You still own the property, or you still own your piece of the property. So you're getting a little bit of cash flow every single month.
I still get my 6%.
No,
or is it changed?
No, that's generally for a short period of time until some event happens.
And then after that, you just own a little percentage of the building if a next event happens.
Yeah.
Well, that's pretty interesting stuff. I think that's what a lot of people don't understand. That syndication is really the way in, to get over the barrier of entry issue. That's really, really great that you can break it down like that. And I know there's a million varieties and exceptions and numbers, but that's how one basic one could look. That's fantastic.
Yeah. And you get to learn, as someone who's just breaking into the business. You get to learn. You're going to get a report every month or every quarter that shows how the building operates. You're going to get a report that says this is what's happened with the building this month. This is what happened to rent, and so if you're in with a good syndicator, which is the key.
Yeah. All right, love it. Well, any other good advice you have for maybe having a new broker coming into the business that wants to sell apartments? What would your advice be to them? What they should do? Hey, I'm a new broker. I just got my license. I want to get in the apartment game. What do you say they do? What do they? What's the mindset they need to have? And what sort of situation should they be looking for? Do they look to join a team? Do they look to try to go out on their own? Assuming they don't have their own family portfolio to sell.
Yeah, no, they definitely should not be going out on their own. I mean, this is a business that traditionally has been a mentor-mentee business. Yeah. It's very long term. So if you go into this business with a short-term mentality, you're going to fail, period. And the thing is that most people think that they have a long-term mentality, but when they're 20, 25 years old, they don't.
Right.
So it's really, really, really a difficult business, and you have to be capitalized, because I tell new brokers, you could go for a year making no money. Be prepared for that. Yeah,
that's what I tell new brokers coming into our game, to the residential side. You easily go a year, and it can be 2 or 3 years with very or longer, 5 years of choppy income. It's not
right. And they no matter what they say, they can't really conceptualize working their butt off for 50 hours a week, 60 hours a week, making calls, getting shut down, call after call after call. They can't really conceptualize what that's like to do that for a year without making any money.
Yeah, let alone 2, 3, 4 years. And there's no guarantee that there's a pot of gold. I mean, there'll plenty of people get out of the business too because they don't make it.
Yeah, most people get out of the business. Once you get over the 5-year hump, you're
not really a rookie.
Ideally, you somewhat know what you're doing at that point.
Yeah.
But, that's why that's a great point you bring up, because that's why a lot of the guys that have been around for a long time and have the experience, like me, like Nima, who you had on the other day, when times are, anyone who's looking to sell a property is gonna want to work with someone who's had the experience, who knows what they're doing, who's been through so many deals that they know how to work their way around it and get a deal closed. Yeah. So these times are really hard for someone new coming into the business. Harder than your normal times.
Yeah, and I think that's that's really the advice I would give to anyone getting into real estate and probably any competitive industry. It's like, you got to be prepared, mentally prepared to put in the hours, long, intense hours with no guarantee of upside. But your mindset every day has to be just learn as much as you can, go as hard as you can, meet as many people as you can, and just manage the expectations. This isn't a get rich quick business in any form or any imagination. It takes a long time. And even 5 years, after 5 years of really grinding, you're just graduating from rookie status and just starting to maybe have an idea of what you're doing. Right. And, you know, that's really a big thing. I think people need to understand that. And I appreciate you being straightforward and honest. That's what I try to tell people when they ask me. I'm like, it's not easy. You got to be prepared if you want to get it and break through in this industry.
Yeah. And if you're a good agent, a good rookie agent, and you do 3 or 4 deals your first year, and, you know, 3 or 4 or 5 deals your second year, and maybe, you know, 6 deals your third, like, it's not a lot of deals when you look at it. You know, you're 3 years in and you've done 15 deals. Like, how much would you trust that guy to give him your asset that's worth $10 million when he's done a total of 15 deals in his entire career? Right.
And you think about, after hundreds and hundreds of transactions and years, there's so many nuances of deals, and there's so many potholes, and there's so many curveballs and split fingers, and in 3, 4, 5 years, some people even 10 years have done 15, 20. Like, it's not a lot of experience to know when you're going to battle and going to war that your general has seen it all and done it all. And I'm sure you feel like me, 20 years in the game, I still learn stuff. I'm still into deals, and there's complications and things and a bump that, like, wow, I never saw that coming. And I feel like I'm as prepared as you can be. And then there's still new stuff coming at you. So
there's always something.
There's always something, which makes it stimulating and fun and all that. And, you know, that's the upside of it. All right. Well, look, anything else you want to share with us? Anything about the market? Anything about real estate? Anything about your handsome face and the Billy Idol hair you want to tell us? But I know it's Tuesday. I got to get out there on Brokers Open. You do too. I don't know if you need to, actually.
No brokers open for me, but, you know, I got a lot of people to call, a lot of things to do.
I'm sure.
You know, KennyStevensTeam.com. That's what I got for you.
All right, Kenny Stevens, you're the man.
And, yeah, man, it's always Los Angeles. The weather, you know, the weather's always going to be here, and there's always a reason. You know, the entertainment industry's here. But it's just, there's not going to be a shortage of people wanting to move to LA.
And they're not growing more land. There's no more land. People keep coming, and there's no more land. So it's always been the place people want to live and invest in.
People are leaving too. You know, a lot of people are leaving, but a lot of people are coming here. And if you're in Chicago, if you're in New York, if you're in, you know, other places back east, there's a lot of draw for Los Angeles.
Right on. Go LA, go Dodgers. Kenny Stevens, I appreciate you. Thank you for sharing a little time. I know you probably got 10 listing appointments to go on, but thanks, my man. I appreciate it, and we'll catch up soon in the office.
Thank you, Danny.
Good job. Good to see you, brother. Thanks, man. Have a good day.